Good evening, all. Ira Epstein with your metal market wrap-up. And this wrap-up is for Thursday, the 6th of January, 2022. We're approaching 7 p.m. Central Time. So, is that the end of the stock market? I doubt it. Inflation is the enemy, yet gold can't pick itself up and run. When you look at Bitcoin at $42,700, it's no longer a $70,000 item. It's hard to believe it fell $28,000 since October. That's a monster drop. So all you people that believe in that, that's great. But most of us can't withstand that type of pressure if you're not an investor. I understand if you bought it at $70,000 and you think it's going to $100,000, you're going to hold on to it. How many of you are there? When you look at the energy, sort of waffling right here. So tomorrow's the jobs data. That's what the market's going to focus on. And when it comes out, whatever it says, I'm going to go like this. Whew. We're through with the Fed. We're through with the jobs data. People will return next week to more sanity trading. And I think things will become more interesting. It's really that simple. When you take a look at gold, I don't care what people say, you're neutral. You're right at the 18-week moving average. You're unable so far to prove that you can get away from it so far, but you're staying at this point literally right at it, neutral. That's what I'm going to call that on the weekly chart. When you come to the daily bar chart, well, you had a failure on the chart. How do you get away from that with now having lower highs, lower lows? That's bearish. The market snuck itself for the first time back under the 200-day, the 18, and the 100-day, so now it has them as resistance. Wouldn't surprise me if the market wants to play with them a little bit, but the trend is down, and the selling pressure is going to come into the market against these moving averages. You'd have to get over 1830.70 in order to say, oh, you're on to something else. When you look at the Bollinger Band, it's not hard to see what the market fought. This market failed against those bands. And I keep telling you, you've got to become a student of those Bollinger Bands and understand how they work. And in terms of momentum, well, it's down, but you're already in oversold territory, even with a rally tonight. So the market oversold in a downtrend. If it goes into a washout off the jobs data, the 1769.50 level, a likely target, if it does that. Then we look at the gold-silver ratio, and as I told you, this market's been getting itself into trouble each day. This is how the market looked on Wednesday. I was saying if it starts coming up, the resistance could be that 18-day average where you went just like that through it. A dollar break in silver versus gold, which did nothing like that today, is going to do that. Did it get overdone? I don't know. Market is saying, if you look at it, 82 is a target. It got back under this, but it's not able to stay under it very long. Again, silver's more of an industrial metal. I know that for those of you that like to think of it as precious, nonsense. The only people that think it's a precious metal are the jewelry stores. They're able to sell you that and tell you, hey, the sterling silver, it's this, it's that. Guys, it's what is it right now? $22 an ounce. It's not $1,800. It's not the price of platinum, okay? It is an industrial metal that the jewelry business has fooled everybody with. When I look at it this way, lower highs, lower lows, coming down, the market, when you look at it right through here, oversold. So I don't think you want to do too much there. And the combination, when you look at it and learn from this, the 100-day average and the upper Bollinger Band together, deadly. It's rare that you just slice through them. Now, in the copper market, it's the opposite. I'm looking for support right now. The combination of the 100-day average and the 18, I think that's fairly important. It acted as a buffer right here, and then when you finally got everything over, you had a rally as you had a bullish crossover. Now you're still with the bullish crossover. This is your first slipping to it. Momentum down, trend down. Are you saying to me you might be going back to the lower band at 421.50? I can accept that. I doubt it, but I can accept that that is a potential target. Each time it's done that, it hasn't stayed under there, and I'll make this prediction. It won't stay under that again. It will give you another opportunity. But there's nothing to buy here. The question is, do you want to be short? In the platinum market, again, let me walk you right here. Here is a market on Tuesday. This is only Thursday. If the market rallies, you've got a deadly combination of the 100-day average as resistance along with the upper Bollinger Band. Market goes right to it. The high is $1,004.80. You get right into the upper Bollinger Band, you clear it. That should be it in the way that I teach you to trade. Okay, I would tell you, hey, if you're long, that's what I teach in my Enhanced Bollinger Band course to come out against. And boom, you come down, and that's what you've done. So, is the market in a downtrend? Don't know. Why? Well, this low right here, this low was 946. You've now only gotten as low as 952. If you can get a move up from here, I'm going to argue higher lows, higher highs. The negative is that you've got to correct an overbought condition by getting both these numbers under 70, and that often takes place with either sideways or lower price action, not up action. In the palladium market, this has worked its way back right here. Now, it's interesting. I was listening today. I was reading an article in Chicago about our junkyards and what the extremes they have gone through for catalytic converters. You can't get into a junkyard. Normally, they let you in, you dismantle what you want until they take the catalytic converters out of the cars. They put them in specially designed steel sheds to sell them off as junk because of the metal content, and it's all locked up with guards. That's what they're doing in a number of them because it's that valuable at this price. Find that fascinating. You know, I don't think I've ever been to a junkyard to dismantle a car, but I watch all the Motor Trend shows, that's for sure. Lower highs, lower lows. I should get rid of that dot there. Momentum's been pointing down, and you're now into support here. Now, you get bearish if the market closes under 1835. In the dollar, I'm going to repeat, this is a nothing market. It's just traveling sideways. It's not telling me to do anything. I will say this. You have the pattern now of higher lows and a higher high. That's bullish. Traders are probably buying at 96.20 level. They don't want to see a lower low, so you don't want to see the market under 95.88.5. And if, by chance, it gets something tomorrow that can kick it off the data report, maybe the 96.70 level will be the resistance point. I want you to take a hard look-see at our futures trading kit if you feel like taking a look at it. It's so simple. What it is, it's in our free offer section. You get all the links from the Chicago Mercantile Exchange, and it brings you into all the courses they have and the studies. They're not as good as mine, but they're great tools for the beginning trader, guy that wants to learn chart patterns. I teach you that in this book, show you the different ones that I've learned over the years. You take it from there. Free video courses on pivot points and the Arun indicator. That's going to be included in this as well. Free charting software. Yes, you'll be able to use my charting software. Cause and effect. You better learn that. Why? That is M1, M2, M3 money supply, how the velocities work through the economy, and the Fed is going to turn to that now that this is their new Fed. Their idea that, hey, we got to fight inflation. That means you're going to be watching those. It's free. Just go to the website, free offers, take advantage, or call my staff. They'll work with you. I'm Ira Epstein. You have a great day.